Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, July 19th, 2007, and the market's closed. And the S&P 500 finished with a gain of 67 cents, or just under 0.5% today. And it looks like the people who panicked and sold yesterday morning because of earnings from Intel are probably regretting that right now, as we saw a successful test yesterday of that rising 10-day moving average, as well as the location of the neckline that I have been pointing out here, which indicates a price objective up near 158. And after that successful test of the neckline and the 10-day moving average, I think it makes it more likely that we are going to see a test of that 158 level here over the next several weeks, unless we have some real bad news on earnings. Now, of course, after the close today, we've got Google, and I'm sure a lot of people are looking for that, for the earnings there. I also bought some speculative calls in Polycom, or I think it was PLCM, so we'll see how that report turns out. But the S&P 500 continues to act real strong here. We saw on the 10-minute time frame that the market came right back up to this level yesterday. This 154.60, 154.70. I said it would really need to get out and hold above that level to confirm that the market has recovered. And this is what's known as a bear trap. What it does is it shakes out the weak longs and gets new shorts who are panicky to get involved in the market. And then once the market gaps up like that today, you've got those people buying their stock back or covering their short positions as they realize they're wrong, and they've got no one to buy it from because the sellers were removed yesterday. So that actually makes the market stronger, like to say, from that which does not kill only makes it stronger. Same thing for the market. One day pullback was all that was. We were giving the benefit of the doubt, and will continue to because to the buyers, because we have this rising 5-day moving average, and it looks like a breakout past 155.50 is the most likely situation here. Now, you could also look at this as, well, maybe this is a double-shouldered inverse head and shoulders pattern, which I'm going to point out again is often better as a continuation pattern than a reversal pattern, and that will give us a target about 2 points higher, so up towards about 57.50, which is just under the larger target from 158. So 157.50 to 158 is where it looks like this market's heading, unless we get some kind of negative response from the market due to earnings or whatever. So we'll keep an eye on the 154.50 level. I think breaking back below that again is going to be reason to be much more defensive on the market overall. But great continued recovery after yesterday's shakeout. The IWM, Russell 2000, we have seen this market kind of just trading sideways in here, not really doing much of anything besides trading in this 81.5 to 85 range. And we saw a pullback yesterday, test that rising 50-day moving average. Today we finished with a 34-cent gain, or 0.4%. And what we saw today was now that it's right back up towards the top end of that range. And just like I said, I believe it was this morning, or I said in the WU, the Western Union video. But basically, the more times that resistance is tested, the more likely it is to break out. And we have something happening here that makes it even more likely for an uptrend. First of all, benefit of the doubt goes to the buyers because of a rising 50-day moving average. But we've also got higher lows in here. What that means is the buyers aren't waiting for a pullback to 81.5 before they take control. They took control at 83. They took control at 83.10. And the test, the time between the test is becoming more clustered together tightly. That is that the tests are occurring more often. So that means that the buyers are getting more aggressive price-wise with these higher lows, and they're also getting more aggressive time-wise, which tells me that a breakout is probably imminent here. But don't forget money management. I think getting back below this level right now, maybe about 84.25, that's where that would signal me that we need to get a lot more defensive and give a second thought to whether this market's going to break out or not. But it seems as though the market is ready to go again. So it did hold above that 84.50 level. I think that's going to be important. But even probably down towards 84.25 is what I say is going to be do or die for this next chance at a breakout on the IWM. The semiconductors, these are just kind of recovering from that larger sell-off yesterday, but they added to today as well. They added 24 cents, or 0.6%. So that was a nice move. I still think we're probably going to see it settle down closer to this $40 level at expiration tomorrow. daily time frame, just a fantastic uptrend continues in here with higher highs and higher lows. There's no reason to doubt this, like I said yesterday, and the same goes for the Nasdaq. The Nasdaq 100. Yesterday we saw the market pull back to the rising 5-day moving average. It recovered. It made a higher, it took out those morning highs right in here late in the afternoon, and then gapped up today and was strong throughout the day. Now, there wasn't much opportunity really to trade the Qs so much, but it does give us more reason to be bullish. Again, the rising 5-day moving average, you want to give the benefit of the doubt to the buyers in the intermediate term, and in the longer term, it's the 50-day moving average that tells us we ought to continue to give the benefit of the doubt to the buyers. This market continues to get extended, but it's rallying in a nice stair-step fashion. So, like I said yesterday, we've got a beautiful uptrend, and there's no reason to doubt it.